Probability is your friend in trading, and I'm going to tell you how I used it to make $3K off of just 2 call options trading Microsoft over earnings. All that in today's video. Hello everybody, this is Jeremy Ritz from Courage Pays Better Than Fear Trading to talk to you about how probability factored into a recent trade that I took. And my community knows that I've been very risk off recently with all the volatility as a result of tariffs, the political drama, and I've been playing with extremely small size. However, despite using small size, like I did on this play I'm going to talk about today with only 2 call options, it cost me a little bit over $400. I was able to turn that $400 into $3K profit. So I want to walk you through the trade that I took on Microsoft ahead of earnings and explain to you why, my rationale behind it, what went into it, and why probability really was the main factor in my decision. If you're a trader or an investor, you know that the market has been in a downtrend since February when we hit all-time highs around February 18th and 19th, and we've been drawing down. We hit 21% down, hit bear market territory. We have since been bouncing. And this week, we had big Mag 7 earnings. We had Microsoft and Meta actually report in tandem at market close. And leading up to this event, I always keep track of earnings reports for the companies that I follow, especially the Mag 7. And when it came to Microsoft, if you look at their past 6 earnings reports, and I keep track of this on a chart, and I'll show this up here on the screen for you, you could see that they've either gapped down or gapped up and faded down, which means they were not able to hold on to those gains. And really, when you look at the charts, I'll put this up here as well. Microsoft, since the fall of 2003, when it had a nice push, it's been really moving sideways. It hasn't had a lot of oomph to the upside. Now, last summer, it did hit all-time highs, but after it did that, it really went into a downtrend that it's been in for a significant period of time. So knowing that through my study, knowing that probabilities, okay, 6 times that they've reported, 6 times that earnings pop didn't hold, the math comes into play. And I'm a believer that when you have an opportunity where something hasn't happened in a period of time, that it's only a matter of time and it's only a matter of math or averages that have to come back into play for that pattern to flip. And so that's what I was counting on for this trade to work. Now, it wasn't just the probability component that I was playing. It was also the fact that Microsoft pretty much had been sideways for an extended period of time. And so without any type of significant move and just being quiet, it seemed like the perfect opportunity for it to push up on their earnings report. And that's exactly what we got. It pushed up to $435 at market open the day after earnings. And so it did have a nice move. It did hold. It sold down there a little bit as time went on. So in addition to probability, in addition to the sideways action for over a year, what other factors went into account with my trade? Well, one was that we are in a short-term bullish move. And meaning the last 6 days or the 6 days leading up to Microsoft's earnings report, the bulls have been bouncing things higher. Now, this doesn't mean that the primary trend has changed. We're in a bearish trend from the drop that we had, but there was momentum to the upside. And knowing that that upside was in play, and if you look really across all of big tech, you see these nice double bottom patterns, but they had resistance above them, Microsoft being one of those. But using that trend, that was something that factored into my play. Double bottom, bullish sentiment, short term now, again, because the trend is bearish. And so those 2 pieces also factored into my decision. So with all the uncertainty in place, I did not play this with large size. With the tariffs, the political instability, I went very small, as I have been this really since February, and I bought 2 call options. And the strike price that I was targeting was $420 for Friday, May 9th. That was the expiration date. And the reason why I selected 420 is because if we got above all the moving averages, there was a bit of resistance that I identified on the chart that I felt like, hey, it could get here and stick and hang out just based on what I'm seeing from the technical analysis. And so those call options cost me, I have it written down here and I'm going to flash it on the screen, $2.13 per contract. So remember, one options contract controls 100 shares. So it was $213 per option. So over $400 for my investment. And well, what happened? Well, here's the chart so you can see. And when I sold the calls, I sold them for $18.12. So they went from $2.13 to $18.13. And there was no IV crush. In fact, the volatility was up because Microsoft was pushing, the whole market was pushing. And so I sold probably 2 to 3 minutes into open. And so I made a significant profit, which came out to be $3,195.06 after the commissions and fees that I paid for the trade. And so you can see that even with just 2 call options, even with just a small investment, again, a little over $400, I was able to turn that into $3,000. And one caveat here is, in the past, I have held options that have been profitable off of significant moves only to see them dump. And then I'm sitting there hoping, oh, come back, when I should have sold it right away. And that's just something that I've learned through this process of being a trader, is that when you're up significantly and there's been a big move, take your profit, protect your gains, move on, live the trade another day. And so that's what I did. I locked it in. So it was a good day off of Microsoft, but just wanted to show you how you don't need to have a massive position to make good money from trading or from trading options. And again, nothing is guaranteed, and this isn't going to be the outcome for every options trade that you take. I know it's not the outcome for every options trade that I take, but it goes to show you that, yes, you can spend $400 and turn it into $3,000. And that's what I wanted to demonstrate for you here today. So the takeaway: do you use probability in your trading? If not, you should consider it. And again, it doesn't mean that that should be the only factor that plays into you deciding whether or not to take a trade, but it should factor into that. Also, the trend is important. Trading with the trend, the short-term trend was bullish, using your moving averages, knowing those resistance areas, all those things can factor into you setting up a highly profitable trade that can benefit your portfolio. So let me know any recent call option plays or put option plays that you've had since the beginning of the year. I'd be interested to hear them down in the comments below. Or what is a play that you're setting up here in the next few weeks? Because remember, NVIDIA is going to be reporting earnings on the 28th of May. Maybe there are some possibilities out there for that. But that's going to do it for today's video. Thank you so much for being a supporter of Courage Pays Better Than Fear Trading. Smash that subscribe button, and I'll see you back here next time. Take care, everyone.
Let's go.